Good morning, David here, Weekly Wheat Look. Today is Friday, 17th of June, pre-market open, 6:45 morning, looking at UK wheat chart, November 2016 new contract. And as usual, we'll start with the yearly chart we'll look at the moment. And you can see here, I'm moving my mouse over the left here, yearly, and we've obviously had 3 years of falling market, and at the moment we are obviously just above the lows of the previous year, 2015. Come down into the monthly chart, and you can see obviously you had this rise beginning of April. May was an uncertain month, red candle here and green candle here on June, and obviously at the moment it's showing here that we failed to take out the swing high, monthly high of 122.50. We closed last night at 1990. That's just touching the high of last month, May. So obviously pop down into the daily contract, and you can see here since last week's report, obviously we've had 5 falling days. We failed to keep the swing high here, which was last made in that was in April of last year. Wednesday was the day we failed. Tuesday, Wednesday, and Thursday. Thursday obviously being a big down day, and obviously you can see this candle here. We came to touch the lows of 19. On this failure to break the swing high here, I did put a small short on the market here, and this has continued down since that trade. Looking to find a bounce off this monthly candle here at 119 at the present moment. Obviously, if we just look back from where we were last week, find that, you can see here, obviously on last week we were just forming this candle here and just testing the swing high at 22.05. We identified a price target here just above us, 125. I'll zoom out a bit, and the market failed to go up and break through that level here. The highest got to 24.50, and since then obviously been falling back. Obviously the pre-runner for this rise was obviously the Paris market, and you can see here 5 falling candles here. You can see this is the swing high here, 170 euros. This was identified here on the monthly chart, monthly high of April, and it's broken right through and even taken out the swing high and the monthly high of last month, May, and closing last night 162 euros. So 10 euro fall, and that's taken down that, if you can see here last week where we were, excuse me, we formed this gap just above the swing high here. This is taken out. We identified another support here, 167. 167 was taken out on Tuesday, and obviously Wednesday and Thursday we've fallen back. We just have a look at the Chicago wheat, and you can see here the high was 525. This swing high was 516. Obviously 5 falling candles here. 484 the close last night. It's gone back in a long-term range which has been in. So obviously as we were looking last week, this rise has been a selling opportunity in a sort of sideways market, and we just have a final look at the corn market. The corn at the moment that's the US corn, has managed to stay up above the swing highs and haven't fallen back. If we finally go back to just look at the London wheat market again, obviously at the moment, on comparing the 3 markets, the London wheat market has fallen the least, but has this got catch up to come? Will we see this fall back down below the 19? I think 19 should add support, but obviously all it means now is that we've just fallen back in this sideways trending action which we've seen for the last 3 months, and until obviously we see a real break, my indication, if we just pull up the weekly chart here, I was looking for a weekly close above this swing high to give us an indication whether we then got and test these levels 25 and 34. Obviously you can quite clearly see this candle here. This was a failed break of this swing high here, and all it means is now we've gone back into a sideways trading range in a long-term bearish falling wheat market, and obviously I would expect this to obviously now remain within this trading range again. Obviously we've got our markers in place, we know where we are, we know where the market doesn't want to go above, and obviously we know where support should kick in, and on this chart it comes in at 19 and obviously then down at 16. So obviously the key level this week is for the market to hold this 19 level, and then up and up.